Welcome to Markets Now. I'm Michelle Rook along with Chip Nellinger, Blue Reef Agri-Marketing. Seeing some mixed trade in both grain and livestock futures right now, breaking it down. You've got cattle mostly lower except for nearby live cattle futures. Hogs are trying to bounce today as well. Corn and soybeans have been, while wheat has been lower. So, Chip, let's talk about corn and soybeans. I think this is like the fourth day that we've been higher in both of those markets. And some of that is what, end of month, end of quarter, and then we got reports coming out. So some squaring ahead of that too, or what?
Yeah, that's always the question. We're seeing some short covering into the report on Friday. Obviously, there's a lot of uncertainty with the quarterly stocks numbers, and probably more important this go round because it does give us our final old crop carryout figures. They're really hard to peg and I guess look at and project on these quarterly stocks reports. So you're seeing some short covering into the quarter here, but you also have some tailwinds, or I should say some severe headwinds from the outside markets, and the dollar screaming higher, and questions about the economy. So that's the question. Have we reached a bottom? We're close to it seasonally on corn and beans. Are we trying to bottom in here like we normally do at the end of September and the first week of October? Or is this just a short covering bounce that's going to get sold aggressively once the report's out of the way on Friday?
Yeah, I've asked a lot of people whether we're trying to forge harvest lows or not. The key for soybeans is going to be we got to hold the August lows because we went down, took that out, and then closed back above it here this week. And now we're back above the 100-day. But boy, that's all a work in progress, isn't it?
It's a work in progress, and the chart to me looks very scary. It could be a low. I hope it's a low. But what concerns me the most is we kind of broke under a trend line here. We kind of double bottomed, like you mentioned, in some previous important lows. We're tucking back up on this rally underneath the trend line. If these lows from earlier this week give way, whether that's later this week or into next week, we do have an open harvest window ahead of us as well. It could really open the door for a lot more technical selling. And unfortunately, the outside markets, as I mentioned, the dollar and crude oil, maybe given some headwinds to the economy, that might be the excuse if that happens. But there still is a small sliver of hope that maybe we've turned the corner and scored the lows already. I think the action after Friday at 11, when that report comes out, is really going to be key to the grain markets and the bean market especially.
Yeah, the quarterly stocks sometimes have given us some big surprises that have been market movers. Trade guesses are fairly benign at this point, but what are you expecting?
Yeah, well, I mean, like everyone else, I'm on the edge of my seat because it is so hard to predict where it comes out. I think in the case of the bean market, it's really important because bean stocks are tight. Any way you cut it, it's tight. And maybe not as tight as what the market had feared before the September crop report, but just a 30, 40, 50 million bushel swing one way or the other is a massive movement. And so you could be really on the razor's edge here where if it's 30, 40 million bushels above expectations, that really could be seen as bearish. Vice versa, if it's 30, 40 million bushels below expectations, that really tightens the carryout situation up and makes our yield, estimate this year even that much more important. So small changes on this bean, ending stocks number, quarterly stocks number, really could have major effects on price and be really volatile here at the end of the week.
But corn is where we've gotten the bigger surprises in terms of quarterly stocks.
We have, and there's still a lot of questions there as far as, the feed and residual, as always. We kind of, have a really good feel for what the ethanol numbers are. We get those numbers weekly. We get the export numbers weekly, but the feed number is always a little bit of a black hole, and that residual. And so there's some people out there on both ends of the spectrum thinking that the USDA has been understating what that feed demand is. We know the numbers are down on cattle and hogs both, but it's a real wild card. And to your point, that's, I think, a big portion of the reason why we have these big surprises in the past. Not every quarter do we have it, but boy, some days or some years we really have quarterly stocks reports that really throw people for a loop.
We talked about soybean technicals. Let's talk about technicals on corn. New contract low early last week. We ended a penny higher for the week last week. Now we're kind of running up into chart resistance. So what happens? Do we take that out or not?
Yeah, that's the question. I think the market is trying to form a low. We have some tough resistance ahead of us and just above us. We've got some key moving averages up there. We need to close above the 20-day moving average first. And so we're really bumping up against some pretty healthy resistance, but we haven't seemed to been able to turn the corner and close above it. And, obviously we've talked a lot about here the end of the quarter and this quarterly stocks report coming. That could be the spark that does it. To kind of close above there, especially for the week this week. It could really drive some additional short covering into the new quarter once we turn the calendar into October next week. But we're also right on that razor's edge where if that resists us and we accelerate to the downside, it's not going to look so good. So I think this corn market really is in a real key spot here. We need to kind of close the week on a high note, get above the 20-day moving average, get above last week's highs, and maybe we can kind of talk about that harvest low being confirmed.
Well, let's hope so. Wheat market has, we've hoped that market was going to bottom. That has to bottom too for corn to be able to bottom. But wheat's been facing the headwind that you mentioned, the dollar index. And now, obviously, this morning we're watching kind of the fact that we're not competitive again. And this Egypt tender, talk about that.
Yeah, again, to your point, wheat's going to have something to say as to whether corn has bottomed or not. And unfortunately, we just can't seem to get anything going in wheat. There's just too much. The bottom line, I think, comes down to this. There's too much of a supply left in that Black Sea area. Both Ukraine, Russia, and other Eastern European countries have enough supply left that it's really capping us. And although things have tightened up a little bit as far as the spreads go, I think we've gotten more competitive here in the United States. There's just too much for sale in that Black Sea region of the world, and it's really putting a cap on things. Eventually that'll come to an end, but unfortunately right now there's still cheaper supplies out of Russia and Ukraine and Eastern Europe.
Cattle market has had a tough week here. Is that, reaction to the possible government shutdown, or are we still feeling the hangover of the Fed comments last week about being higher longer on interest rates?
Yeah, in my opinion, I think it's more of the Fed higher for longer. It could be a little bit of the government shutdown potential. The dollar just continues to scream higher, making new monthly highs as we go here, almost on a daily basis. The stock market's seen a break off its highs, potential government shutdown there. To your point, we have $90 crude oil. Is the consumer getting squeezed right now? Are we going to see, a downturn in demand? And box beef has come off its highs, and it's dipped below 300 for the first time in a long time. So there's some worrisome signs out there that maybe the consumer's getting squeezed a little bit. Also, the end of the quarter, funds had a massive long position, so they're taking some money off the table. The question becomes, can we catch hold here the first week in October and rally, or are we going to see some more aggressive selling? And it's a little bit concerning from a consumer standpoint, especially with these headwinds of the economy.
Yeah, and we've done some chart damage in the feeders. We're still holding support in live cattle, but to your point, we got to hold these areas here. But we've had a lot of short-term corrections where the charts have said, hey, we put these key reversals in and then we negate them. Could this be different this time?
Well, I think time will tell on that. And to your point, you have to kind of give the benefit of the doubt. With the cattle on feed numbers we've seen, the numbers being, some of the smallest we've seen in 60 plus years of on feed, you have to give the benefit of the doubt that this is a correction and that you're going to see higher highs eventually into winter and the spring. But you also have to pay attention. If we put a rally in the first 10 days, 2 weeks of October, and then these lows from this week give way, I think that opens the door up to maybe, make people say, or at least myself say, this time it's different and maybe it is a longer term top. But I think again, I give the benefit of the doubt to the trend and that this is a normal break and you're going to see a rally, but you have to really pay attention if it doesn't plan out that way and new lows come in early October.
And we've alluded to it several times during this discussion. First of all, government shutdown. If we have a shutdown, what does that do for this market? What happens?
Yeah, it doesn't do us any favors, right? And I'm not so sure that the market's really trading that yet, although we're really steaming right into that time frame. First and foremost, it probably means we don't have an October crop report. And that's going to be a real negative to the grain markets. So all those government reports, the weekly export sales reports, even some of the meat reports, those grind to a standstill. And typically when there's a lack of news or no news from that standpoint, it's bad news to markets. It means that we've got some selling pressure ahead. So it would be bad from that standpoint, just a normal cycle of the government reports. But it also creates uncertainty, and it would be very negative to the outside financial markets. And when that happens, there's also some spillover effect, and some additional selling that we see in our grain and livestock market. So I don't think any way you cut it, it's going to be good if we see it. Let's hope we avert that, but not a real good track record going forward of getting these debt deals done ahead of time.
No. And the dollar's been higher, I think, as a reflection of that. But talk about the higher dollar. I think we're at highs we haven't been at since November of 2022. Crude oil, are we going to take out $100? And what does all this mean for the economy?
Yeah, that's going to be the question going forward. The dollar just continues to scream higher. Crude oil, as we speak, it's been up $3 plus today. What that says is it kind of gives credence to what Chairman Powell said at the most recent Fed meeting: higher for longer. And the longer crude oil stays above 90, especially if it goes and would continue up and hit $100, that's just going to be that much more of a weight around the economy's ankle. It's going to push inflation further, faster. The dollar being stronger really puts some pressure there as well on the economy. And so I think as you really wrap that into what it means, it's not good, big picture. So really higher for longer. The inflation standpoint with crude oil pushing north of $90 here, not probably a good sign for the economy. However, we are coming into the end of the month, end of a quarter, and then start of a new quarter, and sometimes that can change the trend. So I want to see if this is just a money flow situation, if things kind of normalize. We are stretching the crude oil market to the upside. We're stretching the dollar to the upside, and we're stretching the stock market and equities to the downside. So maybe the quarter change here can kind of see a little bit of a correction of these recent trends and take some of the pressure off from it, from the economy standpoint and the inflation standpoint.
Yeah, that's a good point. You're making something to watch here as we flip over into October. Thanks so much for joining us. Chip Nellinger,
Thanks.
Blue Reef Agri-Marketing. That is Markets Now.